The market just keeps getting crazier and crazier, and the new tariffs on China have gone up to 145%.
By Megan Cassell. Let's get back to her in D.C. because she keeps track of every single possible tariff that could come. And that clarification on China was an important one as well, Megan, perhaps even adding to some of the weakness we're seeing in the broader market.
Absolutely, David. These numbers just keep changing, as you know. And what we've just confirmed from the White House is that the new total rate against China is now 145% tariffs so far this term. That's added to anything that was in place before President Trump took office. That's not a new escalation, but it's written out in the executive order that it was.
So obviously they put a 90-day pause on most of the tariffs around the world. You've probably heard that by now if you haven't. All of these tariffs right here were in place when he announced the huge amount of tariffs going on basically everyone around the world just a few days ago. You can see a lot of major countries on this list in all different parts of the world, the lowest being 11%. And at that time, China was at 84% tariffs. So as you can see, President Trump last Wednesday abruptly reversed course on steep global tariffs that had markets basically panicking, and this was on 60 countries that I just showed you. He's going to pause them for 90 days, but he did not extend the pause to China, as you can see by the New York Times here. And basically, he raised tariffs on China to 125% after Beijing raised its levies on American goods to 84%. So China basically did not back down, and they raised their tariffs, so Trump raised our tariffs on them. And so the reason that extra 20% got added on top was because there was confusion about the exact number stemmed from separate 20% duties on China over issues related to fentanyl and illegal migration that Trump had imposed in February and March. So basically that extra 20% is from what they would call issues over the fentanyl and illegal migration. So that's how we got to this 145% tariff on Chinese imports. It's a combination of China not backing down, Trump saying basically that China is taking advantage of the U.S. in trade, but they also are keeping 25% on steel, aluminum, autos, and non-USMCA goods from Canada and Mexico, as well as 10% on nearly all other imports. So there are still a few tariffs in place outside of the ones on China, but most of the major ones got paused for 90 days.
25% so-called reciprocal rate. You've got to add that to the 20% fentanyl rate. A White House official confirming to me that 145% is now actually the accurate new rate on Chinese goods. So it is one thing that could be pulling these markets down, plus the recognition of all the tariffs that still remain even throughout.
Now, they mentioned the markets being down. The markets are actually down by about 3.9% as of the day of that news being put out there by CNBC. And obviously there's been a lot going on over the past 5 days. The S&P 500 still down almost 1% over the past 5 days. Lots of ups and downs obviously throughout the year. Still down over 10% is the S&P 500 from year to date. So even though we had a huge spike, one of the biggest spikes since World War II, which is also NASDAQ's best day in nearly 25 years after Trump backs down on tariffs. You know, basically the next day after we had a huge rise and like some stocks hitting 10% or more in one day. But now, again, we're down quite a bit the next day. It's literally just up and down almost every day lately.
See him here, the biggest being that rate against China, which the White House says now should hold at 145%, and the retaliation of at least 84% from China on most U.S. goods. Then there are also the sectoral tariffs still in place. Those are on metals and cars. There's the Canada and Mexico tariffs on everything that doesn't comply with the USMCA, which is substantial. And there's that 10% tariff on pretty much everything else. And so even as negotiations continue, that baseline tariff seems for now to be here to stay.
Everybody expects the 10% baseline tariff is going to be the baseline. and that it's going to take some kind of extraordinary deal for the president to go below there.
Now, we know this is not an end to the tariff threats either. The president regularly promises us that more tariffs are coming soon, he says, on copper, lumber, pharmaceuticals, and semiconductors. There's also a 25% tariff on countries that buy Venezuelan oil, which has been signed into law and so could theoretically take effect at any time. And guys, also, of course, there's that 90 days of uncertainty left as the administration negotiates with other countries. And estimates vary here, but the average.
So in other words, there's more tariffs that could be coming, even though the ones that were already announced are paused for 90 days. So he could actually launch new tariffs within that 90-day period for other things, like they mentioned semiconductors, people who buy oil from Venezuela, etc.
Tariff rate after yesterday is still around 20 to 25%, maybe higher now that we know about the 145% rate. So it's pretty much in line where it was before the pause. There's reason for optimism, you could argue, because the president has now shown that he's open to striking deals. But when it comes to the actual tariffs being paid, we are pretty much where we were 24 hours ago. Guys?
Megan, what are your expectations, or what can we expect over these next 90 days? You know, just the manpower needed alone to try to negotiate with I don't even know how many different trading partners would seem to be a very difficult thing to undertake.
Absolutely. That's why we're hearing from the White House so far today that they are prioritizing these countries. They have to figure out how they're going to prioritize. Before all of this happened, so before the past week, they had previously been saying they might do that based on trade deficits, start with the countries with the biggest trade deficits and then move on from there. The trade representative, when he testified on Capitol Hill this week, was pretty clear that, of course, they have.
So another thing she mentioned is trade deficits, which is a big part of what seems to be fueling these tariffs in the first place. It's not necessarily what they call reciprocal tariffs, which would be basically, we're going to tariff you the amount you tariff us. It's not necessarily just that. As you may know, or you may have heard in the last few days, these tariffs seem to have a lot to do with trade deficits, not just who's had tariffs on us and just matching those. It's not just about matching, it's about Trump wants to get out from under these trade deficits and make certain deals, and he's basically seemingly trying to scare these countries into deals that will benefit the U.S.
And that these aren't going to be formal trade deals as known by law, meaning that they're not going to involve Congress. That's a much bigger deal. That's something that a lot of lawyers are involved. They have to go back and forth and have consultations with Congress. A Senate aide told me they have not gotten any heads up from the administration that so-called formal trade negotiations are coming. That just means that these are sort of lower key. They're directly with each country. So I think, the White House wants to make some noise here. We could get some deals announced probably quite soon. Hassett was saying there were some that were ready to go. They just had to sort of be lawyered up. So I think we'll see some action, and then we'll see where it goes from there.
I wonder where Europe fits in that priority list.
So one country that seems to be closest to getting a new deal done right now could be South Korea. According to Trump on Truth Social on Tuesday morning, they have a great deal apparently between the U.S. and South Korea, which was imminent after holding a call with the country's acting president, which he had slammed South Korea with a 25% tariff, and they would fly a team of negotiators to the U.S. to finalize the confines and the probability of a great deal for both countries. So that could be, she mentioned a few different deals going on that could happen sooner than later, that some of them are already in the works since he paused the 90 days. Since he paused the tariffs for 90 days, it looks like South Korea could be one of the first countries in line. According to Besant, they have one of the Vietnamese officials coming in this week. The Japanese are very eager to get over, and he said they think they are going to see a couple of big trading partners do deals very quickly. So it looks like maybe South Korea, Vietnam, and Japan could be first in line to get some of these deals done before that 90 days is up. They have a lot of urgency, apparently, to get this done. And according to Levitt, nearly 70 countries have reached out seeking to negotiate with the administration on tariffs. I think the biggest question in everybody's mind is what's going to happen with China and how is this going to affect the price of goods for the average person, and how is there ever going to be a deal done between the U.S. and China to reduce these tariffs on each other?
Obviously big, 27 members, different countries, and big trading partner, a potential to inflict pain on the U.S. market.
Absolutely, and it seems to be the trading partner that the president is most angry at after China. There was a lot of speculation yesterday in the first flurry when we were still trying to nail down the details as to whether the EU would also fall to the lower 10% rate or stay where it was because it had at least voted to approve some retaliation. I would think Europe gets to be pretty high on that list, partly because I think if there's not progress made with the bloc, this administration might want to go higher, and we might see further retaliation. So I would imagine pretty high on that list.
So even though on Wednesday we had one of the biggest days for the NASDAQ in multiple decades, obviously back down again, right the next day, down 4.45% now or so. And it's just going to probably keep doing this for the next 90 days, could even be worse around that 90-day mark, depending on how many of these deals actually get done, and especially depending on what happens with China, because so much of the goods imported to the U.S. are made from China.